Hello, what I'd like to talk with you about today is one of my favorite slides, which is entitled The Randomness of Returns. And what it shows is that returns of the market, the various asset classes, are random, year by year by year by year. So, let's take a look at the slide now. Okay, let's take a look at the large graph at the top of the page. You'll notice that there are many colored boxes in this graph. You'll notice that each box represents a different asset class, and each column represents a different year. The first year on the left is 1995. The last year on the right is 2009. Each of the colored boxes represents an asset class that is listed to the left in the smaller box. We have dark blue being U.S. large cap. We have gold being U.S. large cap value. We have green is U.S. small cap. We have orange, U.S. small cap value. We have red, U.S. real estate. We have olive, which is international value. We have brown, which is international small cap. Light blue, which is international small cap value. We have emerging markets, which is magenta. We have the coral being U.S. 1 year U.S. fixed. We have tan being 5 year U.S. government fixed, and we have gray being 5 year global fixed. Now, let's take a look at two of the colors. Let's take a look at emerging markets, which is the purple, which in 1995, it was the lower left-hand corner, down the lower left-hand corner, and it was a negative 5.19 return. If we look at 1996, the following year, it went up to 6.04 in the middle. It went in 1997, it was down. And you can see that each year it takes a different position in the graph. 1999, it was number one with 66% return. And you can see in 2000, it was down negative 30.6. And it was back up in 2001. You can see that it changes year by year. It's never with the top in 2 years in a row, and it's never been at the bottom 2 years in a row. Take a look at the U.S. small cap, the green. You'll notice in 1995 it was third from the top. 96, it was fifth from the top. And you can see, when you let your eye follow that, it goes up and down and up and down. And when you look at this graph, there is no continuity from 1 year to the next of any asset category. And to me, it's a very visual picture of the randomness of returns. And when somebody says that you can determine what next year is going to be based on the prior year, I sure can't see it. And I don't know whether you see any pattern in this either. Take a look. Do you see a pattern? Do you have any idea what 2010 will be? Well, this goes to show the randomness of returns. And what's good about the randomness of returns? We can rebalance a portfolio. We can sell the asset category that's high. We can buy the asset category that's low. We can be making the changes to our portfolio by asset class, not by stock picking and market timing. If you think it's hard to determine which asset class will be better next year, think of how difficult it would be to micromanage and determine which company is going to be the highest performing company next year, or which mutual fund will be the best performer next year. It isn't going to happen. Okay, we can see from the slide that returns are random. That is why we don't want to do market timing, we don't want to do stock picking, and we don't want to look at past performance. Because even past performance of an asset category doesn't repeat, let alone past performance of a mutual fund. And a mutual fund even says that past performance is not an indicator of future performance. All you have to do is read it, and it tells you that. And here it is graphically. The asset returns of any asset class don't repeat every year. So, what do you have to do? You have to buy and hold the various asset classes in your portfolio so that you get the market rate of return of each one of those asset classes. And that's our goal. Our goal is not to try and outperform the market. Our goal is trying to capture the market. Because if we do that, we're going to do better than 99% of the investors out there. So, this is what we offer to our clients. So if you're a current client, you are invested in many of these asset classes that are shown here. And if you're not a client, you need to be. So call us at 561-744-9547 and come in and let us do an analysis on your portfolio for you to find out whether or not you are diversified. Are you getting these asset classes? Do you have a lot of overlap in your portfolio? How much risk do you have in your portfolio? What is the expected return of your portfolio? Because if you don't know that, you need to find it out now, because 10 years from now, if it was wrong, it's too late, because you cannot get those 10 years back. So call us. It's 561-744-9547, or go to our website, www.smartplaninvesting.com. Either way, contact us.